Jayden, aren't we recording a video today?
Yeah, we're doing a video for single people looking at buying your first home. So if you're a single person and you're looking at buying a loan, this is the video for you.
Let's dive right in. And remember to hit that subscribe button below to keep up to date with all the latest property and finance.
So since the Royal Commission, the bank and lending world has changed. And if you're a single person out there, you probably want to get into property as much as everyone else. But you might be wondering, is it harder? Are the banks going to look at me different? And the answer is, yeah, they will.
Surprisingly, we've seen the lenders get really tough on single applicants. So today, we're going to take you through 5 things you need to know if you're planning on applying for a home loan on your own. The first thing we're seeing is the bank's credit scoring system tightening up.
Yeah, Nathan, because of outsourcing, AI, computer systems, all that sort of stuff, the banks are using lots of fancy technology to take your existing credit score and then overlay their own metrics and algorithms and different things to basically say yes or no, whether or not you're a good borrower.
In fact, it actually helps them speed up the application process because there's less human intervention and more ones and zeros to help make the decision right.
The part that sucks though is that before your application even gets looked at by a person, you can literally just say no. It's a bit like that sketch from Little Britain. So what can you do to protect yourself?
So the first thing to be aware with the bank scoring system is your own credit history. Now, if you've got any late payments in the past, anything to do with defaults on your credit file, that's all listed for 2 years. So the banks will look at that and it actually will affect your ability to get a loan. On top of that, the banks have long memory. So if you've had any issues with your bank and you're applying directly with them, that's going to go against you too.
The third thing that they're really getting in the weeds about are the details on the application form. So believe it or not, things like how long you've been at your address, your employment history, all that data is really important to the bank because they'll look at that, and if Nathan's only put in one job that has been there for 6 months and forgot to put all the other job details on the application, they're going to be more likely to score you lower and knock back your loan. So the best tip we can have here is you need to sit down with your mortgage broker and go through and completely fill out that application form. I'm talking about putting your home address for the last even 5 years, putting your employment history potentially up for the last 5 years, and having all that information there, so then when they go to assess your application, they've got a really rich amount of info on there as a single person, which is going to help you get your application approved.
It's even the little 1%ers that you probably don't think are a big deal, but all add up, including things like your employer's address and even their correct mobile phone and telephone number.
Yeah, in fact, Nathan, I had one, it was a few years ago now, but the loan got knocked back initially because they were based in Brisbane, say, but the employer was in Victoria, and the bank was like, well, that doesn't make sense. How are you working for someone interstate, etc., etc.? Fast forward for today, we check out all that stuff up front. If there's information that doesn't make sense, then you can at least say, well, Nathan's actually working from home. It's part of his arrangement, his ongoing job, and here's the employment contract that says he doesn't have to go to the office.
The second reason why we're seeing singles getting knocked back is rental history. Yeah, that's right. Rental history is actually something that banks will look at, especially when trying to ascertain your savings history. So the bank looks at something called genuine savings. It's either through savings or your rental history, which we're seeing far more frequently nowadays.
Yeah, put it another way, the banks just want to know if you're a good or a bad risk. And usually when there's 2 people on application, the risk is kind of spread across 2 people and they can take a bit more tolerance there. If it's just on Nathan as a single person, they're going to look at everything. They want to know how long you've been in your job, how long you've been savings, and they want to make sure that you've been making your rent payments on time. You had one recently, Nathan, that they got into a bit of trouble because of one little missed payment.
That's right. They couldn't quite demonstrate their 5% savings over a 3-month period of time or longer. So we went around it by looking at the rental history. The bank asked for this to demonstrate that they had a good ability to pay their rent, even though they didn't quite have the savings pattern to prove it. Unfortunately, on the rental ledger, there were some small arrears notices. The bank actually didn't like this and knocked back the application, and the applicant had been not aware that this was actually happening on their rental history because they actually didn't take any notice of it.
Yeah, it can be small things like that that can really derail your application. So your rental history can make a big difference. Make sure you're checking it every month in your statement so that you're not falling behind, and you're gonna be okay. The third reason why single applicants are more likely to get knocked back is they've got a lower deposit.
The fact is, the average couple take 4 years to save up a 20% deposit. Looking at single applicants, that can be 2 to 3 times longer to save the same or equivalent deposit. What that means is a lot of times single applicants go into an application with less than a 20% deposit, which poses as a high risk for the lenders, especially when they're assessing your application.
The fact is, the banks are looking at you if you're a good or a bad risk, and the less deposit you have, the higher risk you are, and because you're a single person, the risk comes back on you. So if you do have a lower deposit, the banks are going to look at you a bit more critically. But it's not all bad news, right, Nathan?
There are ways around it. So simple things like if you've got a parental guarantee, that can actually help you reduce the risk in the bank's point of view. On top of that, if you've got family that's happy to help by the way of gifting funds to you to bolster up your deposit, that's another thing that's going to help give the bank ease of mind that you're not so much of a risk.
Otherwise, it's just a matter of trying to tick all the other boxes that we mentioned earlier. So if you do have the minimal deposit and you are a single applicant, make sure you've got all the details in your application form. Your rental history is clean, your savings patterns are really nice and tidy, because then that's going to make sure your loan application gets approved.
The fourth is high living expenses.
Years ago, the banks used to allow you to just put $1 for your monthly living expenses and they wouldn't really read into it much. Fast forward to today and the Royal Commission era, and now the banks use different benchmarks. One of them's called HEMS, and it's basically a benchmark that they assume that as a single person, I spend say $1,700 a month, but as a couple, we'd spend about $2,400 a month.
What this means is that the banks are actually looking at your living expenses 40% higher than what it is as a couple. This means that your borrowing power is impacted, and when lending money and getting to your upper end of your borrowing power, this makes the banks nervous and gives them more reasons to knock back your application.
Yeah, I guess put another way, as a couple, the banks assume that it costs you less because everything's kind of shared. We can share a loaf of bread, that sort of stuff. As a single person, they say, well, Jayden, you've got to pay the whole electricity bill, you've got to pay for all your own groceries and that sort of stuff. So it is a bit harsh. But again, it's not all bad news.
Some practical tips here are, look at your monthly budget. The banks are actually going to look at the last 3 months of your spendings pattern to get an idea of what you're spending per month.
And you just need to be aware of your living expenses. Try to avoid stuff like Afterpay and Zip Pay and just discretionary expenses that you wouldn't otherwise necessarily need. Again, because you're a single applicant applying on a loan, they've only got one person's statements to look through. So they're going to look at things forensically. And if there's expenses in there that are a bit out of line, or if you're spending more than that $1,700 a month, you're going to have to be able to justify it and explain why that is and why you can kind of pull your socks up to apply for your home loan.
Number 5 is work.
Work. Again, the buck stops with you as a single applicant. So the banks are going to be really in the weeds on your employment history, how long you've been in the job, how consistent your work and your hours have been, and even the type of industry that you're in.
That's right, Jayden. It's more of a character thing. The bank's going to be looking at your job security, and even if you've got income such as commissions, overtimes, bonuses, things that might not be as consistent, the banks are going to shade that and try and use less of that income in your application.
Listen, the key tip here is, like we mentioned in a video we did a couple of weeks ago, is giving as much information as possible. So in the case that you're getting paid bonus incomes, instead of giving them the bare minimum 2 pay slips and a group certificate, maybe give 2 or 3 years worth of commission statements or group certificates to show that, hey, my income's been really consistent over the last few years and I'm in a really strong position, even though I'm a single person.
And like we said earlier, it's important to give the bank your full history, especially with your working background, so they can get an idea if you've been in a similar industry, just in a number of different roles. They get a bit of comfort around that, especially over the last 3 years. You can show you've been consistent in the same role, just with different employers.
And that's it for today, guys. What did you think of the video? Which point were you most surprised about? Leave a comment below. We'd love to hear from you. And if you do have any questions, hit us up at huntergalloway.com.au. You're gonna do the same thing.
No, I'm not doing
Do
it.
the same like Beyonce.